I spend a lot of time worrying that I'm falling behind in life financially. I feel like I'm not having enough and I fear that I've wasted years of my life. I'm sure most of you watching this video also have some sort of feeling quite similar to what I'm having. The weird thing is that on paper I've done quite well. Looking at myself from 9 years ago when I came to Germany as a student to get my master's degree. At that time I had 9,000 euros in my blocked account. My bank account drained for the first 8 or so months because I couldn't get a job. Then finding a student job, thesis and a full-time job. I have seen the ups and downs of life in Germany, but there is a feeling that persists and it never seems to go away. I wanted to look for answers to why I have this feeling and perhaps find a way to stop this feeling. During my search, I stumbled upon surprising insights about what true financial success really means. So in this video, I'll share my results and share how to determine if you're thriving financially in Germany. I'll also share 6 important milestones in Germany that are worth celebrating. Most importantly, I'll also share the reason I discovered behind my financial security in the first place. By the way, if you're new to the channel, my name is Esan, I'm a researcher, and on this channel we discuss how to achieve financial independence in Germany. In Germany, you could be at different stages of life. You might be a student, searching for a job, starting your career, or gaining experience after working there for a few years. During these various stages of life, we often feel behind, mostly because we don't set goals or lack SMART goals. I don't think I personally ever had a problem with setting up SMART goals. Now, the SMART in SMART goals stands for specific, measurable, achievable, relevant, and time-bound. By defining these parameters for your goal, you increase the chances of achieving it within a specific time frame. This approach eliminates vagueness, sets clear timeline, and makes it easier to track progress and identify missed milestones. As I said, I generally don't have problems setting up goals, at least financial goals. What I've found is that as soon as I achieve a goal, I quickly set up another one, constantly trying to achieve more. Now, this is what I have found to be a huge factor of never feeling satisfied or feeling financially behind. If you too ever have a similar feeling, let me share how to tell if you're thriving financially and why you should be celebrating these milestones in Germany. The first milestone is your first full-time salary. When you first start earning money, especially during your studies, the situation is such that the income barely covers your expenses, especially if you live in an expensive city or if you are unable to find a job soon after coming to Germany, just like I wasn't able to find a job in the first 8 months I was in Germany. Sometimes you spend more, sometimes less, but it's just enough to get by. So the first important milestone is getting your first full-time job paycheck. After finishing your studies in Germany, reaching this milestone is a real achievement that you should be proud of. However, there's one thing to keep in mind. Your first income will likely be higher than your previous student budget, but your expenses should still be at a similar level, like when you are a student living in a small apartment. Unlike those who give into lifestyle inflation, you should celebrate your first salary, but within reason. Be happy that you have achieved this financial milestone, but don't go out and waste all of your salary on unnecessary things. You should look to improve your lifestyle, but don't try to improve it that quickly because you still have to reach the second milestone, which is finishing your first probation period. Here you might be thinking that this doesn't seem like a milestone one should be celebrating. But financially speaking, as a foreigner in Germany, this is indeed a big financial milestone. By finishing your probation period, you are now entitled to so many protections from the German government as an employee in Germany. For example, after your probation period is finished, your employer cannot fire you without a proper cause. The only exception here is with companies that have fewer than 10 employees. Here, these companies can still fire you without a concrete reason even if the probation period is over. In addition to the job security, celebrating the completion of the probation period can help strengthen your connection with colleagues and create a sense of belonging within the team. It provides an opportunity to celebrate and share your accomplishments with coworkers, creating positive relationships in the workplace. It also creates a positive outlook for the future and allows you to start the next phase of your career with enthusiasm and motivation. Before I share the third milestone, please hit the like button if you're getting value from this video and consider subscribing. So the next financial milestone in Germany that you should be celebrating is having more than 10% savings rate. In terms of percentage, the average saving rate in Germany is 12.1%. But it's important to note that the ideal savings rate varies depending on factors like expected salary, time available for saving, and desired future wealth. Here, having a 10% saving rate is a good start, but if you can save more than that, then it's good too. For some, this might be a high percentage, and for some, this is a reasonable number. But according to a survey, the average monthly saving for people between the ages of 18 and 29 is €390 per month. 30 to 59 is €467. For 60 years or older is €475 per month. So if you are able to save this amount per month, you are already saving similar to the average person in Germany. Now you can use a free tool like Finance Guru to track your expenses and figure out your expenses. This way you can be sure how much you can save each month and identify which regular and irregular expenses to reduce and determine how much you can save each month. If you're interested, I'll put a link to the Finance Guru in the description below. Now with time, you should look to increase the percentage from 10% because ideally your salary should be increasing and your lifestyle creep should not be changing as much. So the higher your standard of living, the more you'll need to set aside. A 10% saving rate is a good starting point, but you should be aiming for 30% or even more. The next financial goal is having an emergency fund. This is important to protect your standard of living from unexpected events like job loss or high expenses. The emergency fund acts as a short-term insurance to avoid financial strain during unforeseen circumstances. The ideal amount for the emergency fund depends on what you want to safeguard. A good guideline is 3 months worth of net income, which gives you time to find a new job without major financial constraints. However, it's individual and varies based on factors like the potential damage you want to cover. For example, my first emergency fund as a student was €1,000. Then within the first few years of my job, I increased my emergency fund to 3 months of pre-tax salary and then finally 3 months of after-tax salary. You can decide for yourself whether you want to have a 3-month salary worth in your emergency fund or some other amount. But remember, each time you are able to fill up your emergency fund, you should stop and celebrate your financial milestone in Germany. Let me know in the comments what amount you think should be in an emergency fund and should it be kept in a savings account or a fixed deposit account. The next milestone is your first 10,000, 50,000 and 100,000 euros. When you invest, your wealth grows faster over time due to the compounding effect. The first 100,000 takes the longest to accumulate, but the next milestones come quicker and quicker. The initial step is the most challenging because the compounding effect is not very noticeable at the beginning. It kicks in more significantly once you have a relatively large amount of wealth. After reaching your first 100,000 euros, you are much closer to achieving this step. The same principle applies to the first 1,000, 10,000, 50,000, 100,000 and so on. But here, a lot of expats in Germany usually feel behind, especially when they compare their colleagues and other Germans in the same age bracket. For example, someone said my 27-year-old German colleague Thomas has 50,000 euros invested in stocks and has a more than 30% saving rate. I, on the other hand, am 35 years old and I don't even have 10,000 euros saved. To that, I would say good for Thomas, but you shouldn't be comparing yourself with him. You should only compare yourself with yourself. And let me tell you why. Most expats in Germany come from a difficult financial situation and want to make a better future for themselves and their families. Most have families back home that they need to support. Some have taken student loans to come to Germany, and many other cases. So if you ever feel financially behind compared to someone else, always look at yourself and how you are better off financially than yourself a few days, months, or years ago. So celebrate each small win. It's a marathon and not a sprint. The sixth milestone, which most expats in Germany set as one of the biggest financial goals, is buying a house in Germany. Most expats in Germany I know have this goal. Some have already achieved it. Most are still striving to reach this milestone of financial success in Germany. If you're planning to buy a house, can be an important milestone, but it's not a necessary aim for buying a house in Germany. In my opinion, owning a house is just one way to build wealth. Now, if you aspire to own a home in Germany, you need to understand that before the house becomes fully yours, you need to overcome several other milestones. First, you need to save up for the down payment, which can be quite challenging. Typically, you'll need at least 10% of the purchase price to cover the buying cost, in addition to the down payment. Let's take an example. If a property costs 250,000 euro, the buying cost alone would amount to at least 25,000 euro, and with a 10% down payment, you would need an additional 25,000 euro. So for a purchase price of 250,000 euro, you should be prepared to have at least 50,000 euro. The second milestone in buying a property is the purchase itself. This may seem like an exciting part of the process, but it involves includes many steps. You'll need to attend numerous property viewings, face potential rejections, make decisions, apply for a mortgage, go through the notary process, and handle what will likely be the most significant financial transaction of your life. Despite any challenges along the way, this milestone is definitely going to be the one you'll celebrate the most in your journey to building wealth in Germany. Now, there are many other financial milestones in Germany which should be celebrated. One of those is investing your first 100 euro. If you want to know how to invest your first 100 euro in Germany, you can watch this video. And if you want to know how to make more money in Germany, you can watch this video. So thanks for watching, bleib gesund, and I'll see you in either of these two videos.